Hey, Flourish family. Welcome back to another episode of the Financial Flourish podcast, where we talk about how to flourish in finance and rise in freedom. I'm your host, Michelle, and today we're tackling something that affects nearly every household: credit. Whether you're financing a car, applying for a mortgage, starting a business, or even co signing for someone else, credit plays a huge role in shaping our financial opportunities. But here's what I've learned over the years: credit doesn't show how you handle money, it reveals how you handle responsibility, trust, and consistency. To help us unpack all this, I'm joined by a financial expert, Dr. Sharon Ritchie-Brown, who is the division chair and a professor of business at South Florida Bible College and Theological Seminary. She's also a former vice president of banking. We're so excited that she's here. Sharon, welcome to Financial Flourish.
Thank you very much, Michelle. I am so excited to be here. I love any opportunity that I can get to talk about credit because it affects so many families. Actually, it affects all families. How you handle it is really what we are talking about today.
Okay, so let's start with credit because people hear credit and they start thinking debt immediately. So, what do you say?
You're exactly right. Credit at its core is just trust. In my own country, Jamaica, you go to the corner store, you live in a community, and you trust a bread, okay? Meaning you
Yes.
take a bread on credit, and when you get paid, you go and pay the shopkeeper for the bread.
Yes.
It's the ability to access money now based on the trust and that you'll pay it back later.
Yes.
You understand what I'm saying?
Yes, and it's
Yes.
it's funny that you talk about trust because I also grew up in the Caribbean and I know that people trust goods, right? And I
Yes.
never really connected both of them until very recently
Yes.
because what it's really saying is, can I trust you now to believe that you're going to pay me later? And that's a
Yes.
big thing.
It's a big thing. Yes.
So what do you say about somebody's credit report then? What does it really show?
I think that your credit report does not show your personality. What
Okay.
it shows is your patterns. Okay.
Yes.
What it shows is whether you can be trusted in handling your business affairs, your money affairs. If you credit something, whether you pay it back. That's
Yes.
really what it says. If I say two people, John and Jane, they earn $60,000 a year.
Mm-hmm.
Jane pays every bill on time and keeps her balance under 30%. And we're going to talk more about that.
Yes.
Chris, though, he forgets to pay one card payment or maybe two. And right away, that person's credit is affected. Now, the individual who pays on time, John, John has the benefit of trust.
Yes. Yes.
Yes.
And so the creditors know that John, I think John is the one who paid his bill. So John can actually say, I'm going to pay on time. So the creditors are saying, we can trust him. And so we can give him more credit. And it's very
Exactly.
important. Yes, it's very
And
important that people understand that.
yes, and one of the things that we have to be reminded of is that every time you make a late payment on something that you credited, somebody who
Hmm.
gave you trust, your
Yes.
score goes down by up to 100 points.
Wow.
And it affects future loans, right?
Yes.
It can also affect your interest rates, your insurance
Hmm.
rates.
Hmm.
If you have to rent a property, it will affect your rental application. And
Yes.
there's some organizations that will not employ you unless you have good credit.
Wow. And
Yeah.
that's important because it depends on which, department you're going to be working in. They have to know whether or not they can trust you. And it's
Yes.
based on your past actions, even in your credit.
Absolutely. Absolutely.
So credit then is part of our financial reputation, right?
Yes, and the good news is that if you lose that reputation, it may take you some time to rebuild, but you can. And we're going to discuss that later.
That's very good because, a lot of people who are listening now might have had some issues, and sometimes, life happens and they've had some issues with their finances. They were not able to pay back as agreed. and
Yes.
so it affected their credit. But I'm so happy that you said that, that there's hope that if someone has a bad financial reputation, they can fix it. And it's very important that
And
they
I,
know that.
yes, it is. And ideally, you want to have the tools so you don't develop a bad reputation,
Yes.
of basically distrust. You want to have those tools so that reputation is not developed. But you also want to have the tools that will give you good ground going forward, right? And we're
Yes.
going to talk about those tools and how we can fix those challenges associated
Yes.
with repairing that trust relationship.
Yes, so that's good news for listeners. You know that some of you might have had some issues or you might have bad credit right now. So,
Yes.
what Dr. Brown is saying to us today is that don't worry, you can rebuild it. So, that's very important. And we're going to get
Yes.
into the meat of the matter later on. So, tell our listeners what the credit system is about because some people might not even know what we're talking about. And this is primarily in the United States. What is the credit system about, and how can they check their credit?
Okay, so basically we have three United States credit bureaus, okay? And a lot of
Hmm.
times people believe that the credit bureaus are government entity. They're not.
Hmm.
And the three main credit bureaus are Equifax, Experian, TransUnion. Contrary to what people believe, they're not government controlled entities. They are
Okay.
privately owned. And the main reason why we basically have three credit bureaus is what small business is built on in the United States. And small business is built on competition.
Yes.
So these bureaus compete in terms of redundancy. If one bureau has incomplete or inaccurate information, others might not. And each bureau may have a slightly broader data, right?
Okay.
The thing to note is that one is not necessarily better than the other.
Okay.
In fact, some lenders pull all three to get a more complete picture of your history and to
Yes.
look at your payment patterns.
Yes, because I know sometimes when I've had to borrow, I might get one, depending on who you're borrowing from, they might pull, let's say, Equifax, right?
Hmm.
And then you see some things on Equifax and then it's not on Experian or vice versa. So,
Yes.
yes, I am aware of that.
So the credit bureaus are there to make sure that lenders basically have adequate information, but also that you are aware of what's in your credit report.
Okay.
Yes.
So let's say someone wants to check their credit report. How do they do that?
Well, every one of the credit bureaus will give you a copy of your credit report for every year. So you can go
Hmm.
to Equifax.com, you can go to Experian.com. I'm not necessarily sure of all the websites, but if you type in
Yes.
Experian, it will give you where you can go to get a free credit report. So every year you have that opportunity to check your credit.
Okay.
In addition, if you apply for a loan and get declined, you may get declined not necessarily because you have bad credit, but you may
Hmm.
get declined because you have a lot of inquiries. We're going to talk about that. You may get
Yes.
declined because there's not enough information on that particular credit report that they have pulled.
Yes.
And so if you get declined, you can also request a free copy of your credit report.
Okay. So you can also go to annualcreditreport.com and get a
Yes.
free copy. Now, it's funny you say that you don't necessarily have to have bad credit because I remember when I came to the US to live, me along with a friend of mine, we were going to get an apartment. We were going to
Mhm.
school and we were going to get an apartment, wanted to go off campus. And the manager of the complex told us that she wasn't able to rent us the apartment. And we
Okay.
asked her why because we had money. I mean, we had tens of tens of thousands of dollars
Wow.
between both of us because we were here going to school, so we had our tuition money and our room and board. And she said because you do not have any credit history, because remember we had just came here, we had no credit history, and she said to us, bad credit is better than no credit.
Yes.
So if they don't know who you are, they're not willing to lend you anything. So yes, that's an important piece of information that people need to know.
Yes, and people may wonder, why do you want to request a copy of your credit report? Because you know what you took, or you know
Yes.
who gave you trust. But it's very important to check it on a yearly basis because for one thing, it prevents and mitigate fraud.
Yes.
So if someone used your social security to get credit, and it's not uncommon, it has been done a lot of times. You may
Yes.
never know if you're not checking your report. And
Mm-hmm.
then when you check your report, you can say, well, I don't know where this came from. I don't have a card from these people. And sometimes that is when people find out that somebody has used their social security number to get credit.
Yes.
And it's usually a family member. So don't believe that because you're using your credit and people don't know who you are. Sometimes that happens in your own household.
Yes. Yes.
Yes.
What I like to say to people is check your credit every 4 months.
Yes.
So you have three credit bureaus. Let's say in January, you say, you know what, I'm going to use TransUnion. And then 4 months after, you do Equifax. And then the next month, you use Experience, the next four
Yes.
months. So that
Yes.
way, you're constantly and continually checking your credit report. And then you can spot fraud quicker.
Yes, and that's very good advice. So what we have to realize that if fraud happens, your FICO score is impacted, and a lot of times people don't know what FICO score means.
Mm-hmm.
FICO it means Fair Isaac Corporation, and
Mm-hmm.
it's the largest and best known scoring system used in the United States, and it ranges from 850, which is excellent credit, to 300, which is poor credit. So that's what FICO means.
Yes. And so everything that we do, everything that we've been talking about actually affect our FICO score.
Yes, it does. Yes.
Now, Sharon, also, I just wanted to add for our listeners that if you have been a victim of fraud or identity theft, you can put a security freeze on your credit file. So you can call each of the credit bureaus and have them freeze your credit. Now, what this does is that any new account that you want to open, you have to call and let them know you're trying to apply for credit. And then they'll take the freeze off so that you can apply and then they can put it back on. And this
Yes.
is very important because, as we know, fraud is rampant. And it's not just that you are affected right there because somebody committed fraud on your account, but it's very hard to prove that it's not you. And
Yes.
I've heard stories where it takes people years for them to be able to get that information off. So if you can just put a credit freeze on your account, do that. I know, there are some other companies that say, you can lock your credit and you pay and all that, but you don't necessarily have to pay.
Right.
And if you have been a victim of fraud, a lot of the credit bureaus sometimes would allow you to lock it for free. You don't
Yes.
have to pay for that. I
Yes.
actually have that because my information was compromised with, a large company. And so now Experian allows me to put a lock on my credit. And so each time I need to do something, I would have to call them out. They would send me an email and say, hey, are you trying to get credit? Is this you?
Yes. And sometimes, even with your credit card, if you have a Capital One card, there are a lot of credit cards out there that allow you, whenever anything happens on your credit, they give you a note. It's not necessarily a full history of your credit, but it at least
Yes.
gives you an idea of where you stand in terms of your credit score and whether there were new cards opened. And a lot of credit
Okay.
card companies do that too.
Yes. So I think
Yes.
the credit card companies are being proactive
Yes.
because they're also affected, because
Of
if
course.
if someone uses your card and it's not you, then, of course it's not on you, it's on them. So
It's on
I'm
them.
glad that
Yes.
they're being more proactive in helping us.
Yes.
So Sharon, break it down for us. What goes into a credit score?
A number of things go into your credit report: payment history, your credit utilization, your length of history, your credit bits, your new credit. And I'm just going to go over them starting from the bottom first. So your credit
Yes.
mix is, the types of credit that you have, whether it's a revolving credit or it's an installment credit. So revolving credit, let's say you get a line of credit or a credit card for $500, it allows you to reuse that amount over and over. So let's say the
Okay.
first month you use $100 and you pay off the $100, you can use it again and again and again and again. Okay. The other
Okay.
type is the installment credit, which is like a car loan. Okay. It's a
Yes.
fixed rate account. And so if you took $10,000 out to buy a car, your interest rate is 5%, and you got 5 years to pay it. You're going to pay that same amount every month
Yes.
to pay off that loan until the 5 years is finished. Sometimes people
Okay.
pay it off early, but that's your credit mix, and that is equal to 10%. The next thing is your new credit. Okay,
Yes.
that amounts to 10% of your credit report. So let's say this month you went J.C. Penney, you went to Macy's, and you went to Target, and you each time you applied for their loan, each time you apply,
Yes.
10 or 15 or 20 points comes off of your credit. Because what that is
Wow.
showing the different lenders is that you're applying everywhere for credit.
Yes.
So new credit, it makes up 10% of your credit report. The length of your credit history is a factor. So I've been in this country since 1994, and I
Okay.
started having credit 1996. So 1996 to today is about what, 29 years?
Yes.
If I've had good credit for those years, which I have, that accounts for 15% of my credit report. How long your
Wow.
accounts have been open and whether or not you have been paying on time.
Yes.
Okay. The next one is your credit utilization. 30% of that makes up your credit report. And how do we determine credit utilization? If, for example, you took a $500 credit card from J.C. Penney,
Mm-hmm.
and in 2 or 3 months you owe $499, that's going to
Mm-hmm.
reduce your credit score.
Yeah, because now it's almost 100% utilization.
And exactly, so your utilization should not be more than about 30% of the credit limit that you have. And we're going to go
Wow.
over that. 30%. You don't want to pass that, because then your creditors are going to start to be looking at you differently, right? Because you're
Yes.
using up so much credit. And your payment history is a significant part of your credit report, and how much, that impacts your credit. You have to pay on time, okay? For
Yes.
example, if you miss a payment, your credit report is going to go down at least 30%.
Wow. So you're saying that your credit score can go down 30% if you don't pay your bills on time?
Yes, yes.
Wow.
And the issue is that stays on your credit report for 6 months.
Wow.
Okay, and there are times where it stays there for a year. It depends on the creditor.
Yes.
It stays there
Yes.
for a
Yes.
year, so that is going to be traveling with you, right? It's like your purse that you take all the time. Okay, that's what's going to happen with your payment history. So it's very important to look at those factors and make sure that we take care of those items. One of the things that affect us, especially women, is that, okay, we see a car and we say, "Oh, I like that car. I want to go and find out about the car." And you go to
Yes.
5 different car dealerships, and they have their own way of operating. They go and talk to
Yes.
the finance manager 10 times because they want you to buy the car. But you go to buy
Mm-hmm.
the car without you doing your research. And you
Yes.
don't know what is the dealer fee, what is this fee, what is that fee. But you know that you only have $20,000 to buy the car. And you go there and you sit there and they go through all these shenanigans, because that's what they do. And then they come and tell you, "Oh, we're not going to be able to help you." And they do the
Somebody
same
else.
thing. And
Yes.
then you go to another dealership. It makes sense that we do our research before we go. So we
Yes.
determine how much we want to pay, we determine how much we want to spend. And
Yes.
it's best for you to get your pre approval before you go
From your
from
lender.
your lender, from the person you know,
Yes.
and from the person who
Yes.
knows you. And so when
Correct.
you go there with a little piece of paper, you say, "Listen, I've already been approved. I want to spend $20,000 for a car. I don't want to pay any of your fees. And let me tell you, if you have good credit, they're going to beg you to take the car
Yes.
because you have already done your research." So those are some of the things that affect you. You have too many inquiries in a short space of time.
Yes. Yes. So, in terms of the utilization,
Mm-hmm.
I think most people know about the pay on time, but a lot of people don't realize that your utilization plays a big role because that's 30%.
It
And
is.
so you can have someone who pays on time, but they max out their card every month. that means that their score is going down. And sometimes I have people ask me, why is my score so low? Because, I pay everything on time, but it's the utilization. So that's very important.
So what that means to the lender is that you're a risk because you're relying on credit to live. That is what that is saying to the lender.
Yes.
Yes. If, for example, you never miss a payment, but you have five credit cards, you have one from Bank of America, you have one from the credit union, you have one from Macy's, you have one from Target, you never miss a payment. You're always paying on time. Okay.
Yes.
But your utilization is way up there, right? You have $8,000 limit from Bank of America, but you owe $7,000. And you have a
Yes.
$500 limit from Macy's, but you owe $399. That is going to lower your score because it means
Yes.
that your utilization is too much. Remember, the guide
Yes.
is 30%, and your utilization amounts to 30% of what your credit report says.
Yes.
So
Of
that's
your
a big
credit
chunk
limit.
right there. Another thing, too, that I need to mention is that sometimes you may have a 700 credit score because you don't owe anyone anything,
Yes.
but you don't have any credit. So you're still a
Yeah.
risk, you know? Yeah.
So it's funny because cash used to be king, right?
Yes.
And now credit is king because if you don't have enough cash and you don't have enough credit, then you might not be able to get the things that you need. And I think that's a good segue into the question I want to ask you. When
Hmm.
should you use credit? Because I know some people think, oh, you should not use credit, especially we're here at Financial Flourish. If I'm flourishing, then I'm not using credit. Is that true?
Credit is not your enemy. Okay. Let's give you an example. If you saved up your money, you're going to be a first time home buyer and you have excellent credit, you're doing things well, but you need a home. And
Mm-hmm.
you can afford, let's say, a $300,000 home based on your
Mm-hmm.
credit and your ability to pay. It's hardly likely that you're going to have $300,000 saved to buy a house
Yeah, the
unless you're
everyday.
unless
Yes.
you're in the 1%. You understand what I'm
Yeah, the
saying?
everyday man. Yeah, the
Exactly.
everyday
So
man doesn't.
no, so more than likely you're going to have to apply for credit. So credit is
Yes.
not your enemy. The key is to use it for things that build a value or provide you opportunity, not just comfort
Yes.
or convenience. In other words, if you see a pair of shoes that you have been wanting to have, you don't need it, but you saw it, it was $300 and then it went to 150, and you think you have to buy it. That's that's
Yes.
that's instant gratification. That's comfort.
Yes. So, what would be an example of good credit? The good credit use.
I think that you want to use the guide that we just talked about.
Mm-hmm.
Use credit when you need it, right? So if you go to the gas station, you don't want to use your debit cards because your debit card is tied to your cash in your
Yes.
account. So you can use your credit card at the gas station because it's not your money. It's the
Yes.
lender's money. And if, for example, the card was compromised, you can call up the lender and say to the lender, I did not purchase this. I only purchased $30 worth of gas. And they're doing their
Yes.
investigation. They have to make you whole within 10 days. But it's
Yes.
their money. So those are
Yes.
examples where you would need to use your credit card. I use my credit card to do all purchases for the month, because I
Mm-hmm.
get points. So, but at the end of the month, I pay it off because
And that's the key. That's the
that's the
key.
key. At the end of the month, you pay it off, and then you use it again, and you pay it off. So
Yes.
your credit is not your enemy. It's whether you are a good steward of your funds and whether
Mm-hmm.
you handle those credit responsibly.
Yes. And credit can also be used for opportunities and for value. For example, you want to do higher learning, right? You want to go to university. You can take an education loan because it's going to help you. Or if
Yes,
you have a business that you want to invest in your business, credit is good to help you expand the business and grow because then it helps you to get wealth in the future. So credit is not your enemy. You can use it the right way.
you can. You can. And I tell my students when I talk to them, if you wouldn't finance groceries,
Hmm.
why would you finance anything else? We talked about the
Yes.
payday loan. If you're not financing groceries, why would you get a payday loan to buy the groceries? You know,
Yes.
this is where
Yes.
your credit card would come handle, right?
But it takes discipline because some people really are not disciplined. And if you're not disciplined, ladies, then don't use a credit card.
No, no.
Because if you use it and then you're not paying it at the end of the month, then you're just throwing money away. And we're going to look at that later on in the podcast.
Yes.
Now, let's switch the sides a little. What happened if you're the one lending? Let's say you're co signing, you're helping out a friend, you're lending money. What do you think about that?
Well, I tell people that it's a risk to co-sign with someone else. I have
Yes.
my two daughters here. I love them to death, but I'm not going to co-sign anything for them. Because a
Yes.
co-signer doesn't mean that you're signing for them because you want to help them get the credit. It means that you're responsible for the credit.
Yes. And I think a lot of people don't realize that, so you go and you co-sign, and if that person doesn't pay, then guess who's paying?
You have to pay, okay? And so if you took out a $10,000 car loan with somebody and they pay well for 6 months and they stop paying in order for you to make sure that your own credit is maintained, you might have to pay that loan. You don't want to
Correct.
put
Well, you
yourself
would
in that
have to.
position.
Yes.
You have to. You
Yes.
have to pay the loan.
Yes.
So, and sometimes in order to make sure your credit is not affected, you end up being the borrower instead of the person who co-signed,
Yes.
you know?
And I see that a lot. So that's just something that we have to keep in mind. Yes, we want to help people, but we don't want to help them at our own detriment.
Yes, and not at risk to yourself because if the person stops paying, then what happens is that you're if it's a car loan, they're gonna come and take the car and
Yeah.
it's gonna be on your credit. Involuntary repossession. That stays on your account for 7 years.
Yes. Yes.
You don't want to take that risk.
So, as you know, ladies, here at the Financial Flourish podcast, we believe in achieving financial freedom. And what we've said that means is that you have the resources to live the life that you want to live. Now, at the time of this recording, the US federal government is in a shutdown,
Yes.
and it's been over a month.
Hmm.
And I know that, some persons here who are listening might not have received a paycheck. And
Yes.
we understand that sometimes, even though we're saying you should not do this, sometimes it's necessary to pay just the minimum amount.
Yes.
And some people might even have to go into debt because, in addition to that, the SNAP program is also in jeopardy, right?
Yes.
So we understand that this is a reality for a lot of people.
Yeah, it's a reality for a lot of people, and some people are going to end up not being able to make their payment. Okay,
Hmm.
because of that difficulty. We're not a nation of savers. We are consumers in the
Yes.
largest sense of the word. So there are times when we don't
Yes.
have any backup plans, and it's not just one or two persons. A lot of people, because that's how the country is set up. But
Yes.
if you are unable to pay your credit cards, don't think the credit card company is going to reach out to you because they're not. You need to call them up and say, listen, I've not earned a salary this month because I'm part of that government shutdown. I want you
Yes.
to help me out and let them tell you how they can help you. Okay?
Yes.
Because the bottom line is that they want to be paid. And
Yes.
if
Of
you don't
course.
pay them and it goes into collections, they may never get paid. But if you
Yes.
call them up and say to them, listen, I'm having difficulty, and I don't know what to do, I need your assistance, they would be willing to assist you because the bottom line is that they want their money, right? And the creditors
Yes.
already
Yes.
know that you're affected by this. So I'm pretty sure they will work with you. So let them know of
Yes.
your situation and make up arrangements to pay in the future. Ask for a forbearance if they're offering. Ask for a forbearance. Sometimes they'll give you a forbearance of a month. I know the mortgage companies do that sometimes. They give you a forbearance
Yes.
for a couple of months, and then you check with them again and say, "Listen, my forbearance is coming up, and I don't see any way out because I'm still not getting my salary from the federal government. What can you help me with?"
Yes.
Yes,
Yes. I've seen when I go onto different bank website, I'm
yes,
seeing that they are asking, are you affected by the
yes,
shutdown? So banks are definitely working with persons. So
yes. They
that's really
are.
good.
And those who don't work with you, write them a letter. Make sure you put it in
Yes.
writing. My mom always says the pen is mightier than the sword. Write them a
Yes.
letter and let them know what is going on. You can tell them all the details about you because that's your bank.
Yes.
and then let them know I did reach out to ask you if I could get some help, and I didn't get any help, so I'm making sure to put it in writing.
Yes.
Yes.
So apart from these persons who are currently facing a hard time because of the government shutdown, what would you say to a person who's saying, my credit isn't great and I don't want more debt? What do you think they should do?
Well, one of the things is that, when let's, for example, you don't want more debt because your credit is not good, right? Just
Mm-hmm.
bear in mind that you may not get more debt because your credit is not good.
Yes.
Okay. What I've advised people to do when I was in the financial services industry is to say, listen, if you have some money set aside, that you feel that maybe I want to build back my credit, take $500 from the account, put it in your bank and say, listen, I want a secured credit card because
Yes.
I want to build back my credit. Now, sometimes the bank will say we can only lend you 90% of the $500 because they want to keep something, just in case you miss a payment.
Yes.
Okay.
Yes.
So you get some money so you can pay as you go along. You buy something with the card, and because they're holding your money, right?
Mm-hmm.
So that is still reported to the credit bureau, and
Yes.
they're looking at how you pay. And so you start doing that, even if you're a new borrower, that is something that will help you to build your credit.
So the theme of this episode is credit and character,
Hmm.
right? And they go hand in hand because your credit, as you said earlier, is your pattern. So it's your financial habits and
Yes.
whether or not you follow through.
Yes. One of the things that I also talked about is that in your family, right? You trust your husband. He goes out, he comes in, you trust him, you don't believe he's doing anything wrong. The moment that person does something wrong, you don't
Yes.
really want to trust them again.
Trust is broken.
The trust is broken. So it's the same thing with your credit card company or your mortgage company or your car loan company. You miss a payment and you have an issue. Okay.
Yes.
And sometimes, maybe you will forgive your husband, but if you did it, will he forgive you? The same thing
Yes.
with your credit. You know what I'm saying? And so you can build your credit by doing what I just suggested. I
Yes.
suggest that you don't use a credit fixing agency because I once knew somebody who did that. She was sending her money every month for them to send it to the credit card company because they made an arrangement for her to pay less. But they would send it
Yes.
late.
Well, yes, and apart from sending it late, from my understanding, and I could be wrong, they're also keeping a portion of what you're paying for themselves.
Yes.
So instead of
Yes.
paying to them, send the money into the credit card company. You can
Yeah.
get someone who can go through your credit report with you, come up with a plan to get it
Mhm.
paid down, but not necessarily paying it through that company, but paying it directly to the credit
Yeah.
card company.
Call up the
Yes,
credit
so
card
that's
company and
important.
say, call up the credit card company and say, listen, I know I owe you $800, but I have five. Can you take five?
Yeah.
They are not going to say no because
Yes.
getting $500 is better than losing $800 because they don't know if you're going to pay. But right
Correct.
now, you're
Yes.
offering them $500.
Yes.
Yeah.
And then the other thing to note is that, your credit is not about how much money you make because
No.
you have people making a lot of money and they still have a low credit report. So it's not about how much you make, it's about your integrity.
Yes.
Whether or not you have integrity in your finances. And the good thing is, as we said earlier, that this can be fixed. Your financial reputation can be repaired. And it's the same in your finances. If you're not handling your finances now, you can actually learn how to do it, develop it, and then improve that area of your life. I absolutely encourage you to come to the table, review what you're doing with your finances, and learn how to be responsible and develop your finances. And it's not about being perfect, it's
No,
just
it's
about
not.
being consistent.
It's about
Yes, it's
being
about being
consistent because
consistent.
when it's all said and done, none of us is perfect. I remember when I
No.
came to the United States, I had a credit card from a company named Fleet. And it's the same scenario I fell in. They said $20 a month. And it
Yes.
was like about three years after I had the card, I'm saying to myself, why am I not? I said
It's
$50 a
not
month,
going down.
not going down, right? And I looked at the disclosure, and it
Yes.
said that at the time I was paying 28% interest rate.
Wow.
And the only reason why I was paying that is because I was a credit builder. I was trying to build my credit. And
Yes,
I fell
yes,
into that trap of paying the $20 a month that they say I should pay.
yes.
You know,
And
so
sometimes ignorance, you don't
yes,
know. But that's
yes,
why we're doing this today so that people can get the information that they need, they can get the knowledge, and they
yes,
can improve their credit score. So, Sharon, thank you so much. This was so rich today. We covered credit scores, borrowing wisely, lending responsibly, and connecting our credit to character. Now, I hope the listeners have gotten so much information from this. That was great. And Flourish family, remember credit is not the enemy.
yes.
When you use
It's
it
not the
with
enemy.
wisdom and purpose, it becomes a tool for freedom, not frustration. So, what can you do today? Take a look at your credit report. Go to www.annualcreditreport.com and see what's on your report. If there's anything that's wrong, call the credit bureaus and inquire about them, investigate, find out what's going on with your credit report because this is how we're building wealth. Learn where you stand and make one move this week. Whether you're going to start paying down a card, you're going to set up an auto pay, or just check the utilization because that's very important. So, thank you again, Sharon, for joining me today.
It was my pleasure. This is so needed. And so I hope, your listeners just understand that we're just trying to help. And it's a great avenue to do
Yes,
this. And I thank you so much
yes.
for doing it, Michelle, because it means a lot. And I hope people, gather from it what they must.
Yes, yes. And to our listeners, I hope you have gleaned enough information to keep your credit score high or to get it up if it's low. Remember that good credit is part of wealth building. To keep updated on tips and information that we have, follow us on Instagram at underscore financial flourish, subscribe on Spotify, and also check out our website, absoluteaccountingcpa.com/financial flourish. Remember, we have free resources that you can take advantage of, and we have just introduced our first digital product for sale, which is a template to help creative artists organize their finances for the year. Until next time, remember, good credit is part of wealth building. If you get credit at a low interest rate, you're saving. There's a saying, a dollar saved is a dollar earned. So take one more step towards your financial goal and don't forget to flourish.